Tim Carter. I'm a client portfolio manager on npower's optimisation desk. Welcome to this morning's market update on Friday the 29th of January. So looking at the markets today, they're a touch softer. Key drivers are, number one, a lot of the bullishness in oil markets has dissipated today as OPEC deny rumours of a 5% production cut. Number two, we've got UK gas system is pretty much balanced and power is very comfortable today. And finally, number three, we've got GB pound sterling strengthening a touch through this morning as some poor CPI data from Europe comes through. Those are your main headlines. If you'd like any more information, please contact us on the email address provided. Otherwise, please continue to watch for a bit more detail. So yesterday was a pretty volatile day in the oil markets. Originally we had rumours coming out that Russia had received proposals from OPEC to cut production by about 5%. This would represent wiping out the entire oversupply in the global markets. But it later emerged that this was not entirely true. For a start, OPEC had said that they were willing to meet non-OPEC members in a meeting in February to discuss price stability, but no production caps had been mentioned. As such, we saw oil prices push up to around about 35.70 yesterday before coming back off again in the afternoon. It does represent still a fairly significant gain across the week from Tuesday, where we had our lows, so about 17% higher now, and that's probably due to a bit of a switch in mentality as a lot of short positions are closed out and some risk is priced in around potential production cuts. That being said, it's probably a little way off, particularly if you look at the relationships between Saudi Arabia and Iran. They're pretty fragile at the moment, so it would take one of those countries to agree to any production caps, which is unlikely at the moment. Looking closer to home, UK gas system today is, as I said, just about balanced, although line pack forecasts are 1.5 MCM short today. We've actually had a little tick down in demand, both on domestic heating demand and CCGTs. That comes as temperatures have picked up a touch from yesterday, and we've also got strong wind generation lowering that CCGT demand. On the supply side, though, we've also had a bit of a move downwards, so particularly from storage withdrawals at Rough, which are nominated at just 5 MCM today, whereas they were about 25 yesterday. And we've also had a bit of a tick down in South Hook send out today, which is just alleviating some of the oversupply we might have had from the lower demand. Looking at the power side of things, again, very comfortable peak margins of over 14 gigawatts, as we expect wind generation to pick up and provide around 6.5 gigawatts during the peak demand hours later this afternoon. Finally, as I mentioned, GB pound sterling has strengthened a touch through this morning, continuing a two-day rally. It's currently trading at about 1.319 against the euro. This comes as we've had poor French and Spanish CPI, which is Consumer Price Index data, coming out this morning, and that's a really key indication of inflation, and we're expecting the core European CPI data out at 10 AM today, which may provide an even further direction. That's it for today. As always, have a great weekend, and we'll speak to you again next week.